Good morning and welcome back to Trusted Transitions. Mike Shook here with William Witt, Senior Loan Officer with Element Mortgage. Good morning, Will.
Morning, Mike. Thanks for having me.
Hey, you bet. So, Element Mortgage, they're located at 10600 West Blue Mound Road in Tosa. They're right on the corner of Mayfair Road and Blue Mound Road. So, really super convenient location. And I will welcome. And do you want to maybe just kick it off, share with listeners a little bit about yourself and maybe provide a little overview on Element Mortgage?
Yeah, absolutely. Again, thanks again for having me. I guess just a little bit about me. Wisconsin native, born and raised here. I've been in the mortgage industry it'll be actually 10 years next month. So March 1st will be my 10-year anniversary as a loan officer. Currently with Element Mortgage, we are a nationwide direct lender. So that means that we have everything in-house: underwriting, processing, funding. We have all of our own loan programs, but we also broker a number of different loan programs as well. So one of our big sayings is, we have a loan for everybody, whether it be residential, commercial, everything. We do it all.
Right. Yeah, I've been working with Will for, it's hard to believe, 6 years already. I think is when we started working together. And I can share that over those years, we've closed a lot of business. You've helped me fund a lot of clients' business, and some easy traditional loans and some that were a little more challenging. You found solutions for. That's why I wanted to have you on the program, because I think the services that you guys offer at Element Mortgage are fantastic and could be of big benefit to the older adults, the seniors that we tend to service here through the Trusted Transitions radio program and in our website. For the benefit of listeners, Will, can you maybe just kick it off by sharing with us where the market's at today? What are we seeing for rates right now?
Yeah, absolutely. So the interest rate market, over the past couple of years has been pretty volatile. It's been nice to actually get a little bit of relief on that over the past couple of months. We've actually seen rates come down, quite a bit. Currently, as of this morning, we're at roughly 6.125 for a, traditional conventional 30-year mortgage. Compare that to maybe a year ago, we were easily up in the mid sevens, even the high sevens, for certain folks. So that's a pretty considerable decrease, and we're certainly headed in the right direction as far as the interest rate market goes. So that's
Right.
really nice to see.
Are we starting to see folks calling in to refinance with these rates dropping down? Is the refinance business picking up?
Yep. Yeah, absolutely. Getting a lot of calls and inquiries about, can I refinance? Does it make sense now? How much money can I save, on my monthly payment, with some of these reduced interest rates? So yeah, it's certainly a good time to consider it. Absolutely.
So again, this radio program reaches primarily adults 50 plus, older adults. And I thought for the benefit of listeners, it might be a good idea to talk a little bit about the reverse mortgage, which I know is something we don't do a lot of, but there are certain times that these can be really beneficial to listeners. Can you maybe give us a little overview on when, from your perspective, it is a good time to consider a reverse mortgage?
Yeah, absolutely. I guess before might get into that, just to give kind of a brief overview of like what an actual reverse mortgage is
Yeah.
for folks that maybe aren't familiar. So a reverse mortgage is basically a way to tap into your existing home equity, and instead of you making a mortgage payment, you receive a payment from your lender. So
Okay.
that's why it's called a reverse mortgage. You're not making payments, you're actually receiving payments from your lender, typically each month, but there's different ways that, those payments can be set up. There's a couple scenarios where that can be a really good option. The most that I see it, being applied is for folks that are looking to supplement their income, whether they're just getting into retirement or close to retirement or even after retirement. Maybe you lose a spouse or something like that, and there's just a need for some extra income there, and you have an asset like a home with a substantial amount of equity. You can tap into that and really take advantage of that and receive payments. So the reverse mortgage is certainly a good option for folks that might be looking for that.
Yeah, I've read too that for folks that are looking to delay their Social Security date, right? Because the longer you wait, generally speaking, the larger that Social Security payment can be. So folks that are looking to delay that maybe out a few years are looking into reverse mortgages to supplement their daily expenses until they get to a number that they like on the Social Security side.
Yep. Yeah, I see that too. So from an age requirement, the minimum age requirement is one of the homeowners has to be 62 years old or older in order to qualify. The nice thing about the payments that you receive, whether it be monthly, whether it be a lump sum payment, it's tax free. It's
Oh,
not
wow.
considered income.
I didn't realize that. Okay.
Yeah, it's not considered income because you're taking out your own equity, so
Right.
it's not taxed as income in any way.
Okay.
So that's a nice advantage.
Right. Right. And then I think, is it that you have to remain in the home as well? It has to be your primary residence. I think I've read somewhere that that's a requirement as well.
Correct. Yeah. So some of the kind of the basic requirements, one person has to be at least 62 or older. It has to be a primary residence. So it can't be a second home or a vacation home or like an investment property, for example. Those are the two main ones.
Okay. Right.
As far as being eligible.
Right. Right. Okay. I believe also there's some counseling that that HUD offers to ensure that everyone understands, borrowers understand what the costs are and any possible risks associated with that.
Correct. Yeah, there is a course that's involved. It's typically offered at no cost for the borrowers, but yeah, that would be a requirement as far as underwriting and getting it approved.
Mm-hmm.
It can typically be done online.
Mm-hmm.
In my experience, those courses are pretty straightforward, but yeah, they want you to be aware of kind of the program since it is a little bit more of a unique program.
Mm-hmm.
They just want to make sure that everybody's aware of the ins and outs.
Right. So for listeners, if you're interested in learning more about this type of loan, Will can go over the setup costs and there are certain fees that are associated with this type of mortgage on the upfront side. There's some big benefits to it, of course. I mean, that not paying any taxes on that money, of course, is nice. And if you're looking for a way to supplement your income, if you have a lot of equity built up in your home, this might be an option. So we'll give at the end of this segment, we'll give you Will's direct number that you can reach him at. Let's just circle back to the conventional mortgage though for a minute or two, Will, because our listeners, they're downsizing out of maybe that big 2-story colonial into a condo or a single family ranch style home with no stairs. And they want to take a lot of that equity that they're pulling out of the house and invest it, put it into the market, not necessarily put it into real estate. So they are still looking at taking out traditional 30-year mortgages, maybe, not a full mortgage on the house where they're looking at putting 20% down, but oftentimes my clients are putting down, maybe 50%, 60% down out of the equity of the house they've had for 20 or 30 years and still pulling out a mortgage for $100,000, $200,000, $300,000. So in that case, if it's an older adult who is getting closer to retirement age or maybe in retirement, are there other things they need to consider? Or if they're thinking about retiring, should they be maybe locking in that 30-year mortgage using income they have available to them right now before they retire? Because that changes, right? I mean, on what Fannie and Freddie are going to back based on those loan types, based on whether or not there's income coming in, correct?
Yeah, absolutely. So I'll just touch on kind of the income piece, and this is going to be applicable for most residential loans. So whether it be conventional, FHA, VA, it's going to be kind of the same from an underwriting standpoint.
Mm-hmm.
So an underwriter is going to be looking at income. They want to verify the past 2 years to make sure that it's been consistent. And then they need to determine that it's reasonably likely to continue for the next 3 years. So the way that they do that, let's say you have a full-time W-2 employee that's been employed at the same company for 5 years, maybe 10 years, maybe 15 years, whatever it may be. We're going to verify pay stubs and W-2s going backwards, and then we're going to verify with your employer that you're still working there.
Yeah.
So that basically satisfies that requirement. Now, if you're thinking about retiring, and your income is going to change substantially by maybe switching over to Social Security or a pension or something like that, it may be a good idea to try to handle the housing aspect before you retire. If your current income is going to be higher than what your retirement income is anticipated to be. because that's going to benefit you in terms of, purchasing power. You're going to qualify for
Right.
more, based on your current income, if that's going to be higher. Plus, from an underwriting standpoint, it's going to be easier to get through that process because we can verify 2 years of your current employment. Whereas if you retire tomorrow, you're not going to have 2 years of retirement income that we can verify.
Right. Yeah. I
We
know
can
you
still get
guys,
it done.
I know you
It
look
might-
at that debt to income ratios. Income is a key ingredient, right?
Correct.
Lenders' confidence in providing a mortgage.
Correct. Yeah.
Yeah. Yeah. Well, this is all
Like I said, there's ways that we can certainly get it done in both
Right.
scenarios. But if you fall into that category where your current income is expected to be higher or is currently higher than what your expected retirement income might
Right.
be, it might be a good idea to try to handle the housing first.
That's awesome. Well, these segments go by really fast. Well, it was great having you on to give us a little overview and perspective on the lending side and what Element Mortgage has to offer. Can you share with listeners your direct number if they want to give you a call, if they have more questions?
Yeah, absolutely. So again, my name is William Witt. Direct line is my cell phone is 262-424-3634. And then my email is william.witt@elementmortgage.com.
And there's also a member page for Will right on the trusted-transitions.com website. So you can always go to trusted-transitions.com to connect with any of our guests on the program. So thanks again for being with us, Will, and have a great week.
Yeah, thanks so much. You as well.